word. And we are live. Good morning. Happy Friday. It's July 22nd, 2006. We're flexing our muscles. We're getting ready. We're getting excited. We're getting pumped up. For those of you who registered, by the way, and submitted questions during registration, of course, I forced that on you. I forgot to download the report before I started. So we're going to need you to repost those questions in the chat.
I forget.
I did get a few of them. Well, you're forced to, but some people, because they just want to get through the registration, will just put like ... or something.
Well, this is the time I really did put a question, a relevant one.
Last week you did too, because we were both doing Notify in the same week. So anyway, I want to start off. First of all, thank you all for joining. I really appreciate that you've come and decided to spend an hour with me and all of our friends here. Secondly, Chris, thank you for taking the time to come back with us as a special guest. Deborah, thank you, because I know you two are the sort of people that I brought in specifically this week to talk about this topic of pricing. And I was going to start off, like I said before we went live, by going off on my rant about supply and demand. But I'm going to dispense with that. We'll come back to that later. Because, Deborah, before we went live, what you said, the way you described your 3 packages, I absolutely love. So I want to give I'm going to pass the mic to you.
Got to get me all ramped up again, you know.
Yeah,
like
so let's get pumped up and tell me, what are your 3 packages? What happens if I come to you and say, Deborah, how do I price my services?
Well, you ask as a customer or as an accountant, you know.
Let's do the customer perspective, because that's kind of how you just gave it to us.
Well, from the customer, you know, when a customer calls you up on the phone, they say, you know, hello, or, you know, I need help. And they never call you when things are good. They only call you when things are bad. And part of the pricing part is finding out what their pain points are. And you get there by listening. And that's how you start to see what is valuable to the customer. So anyway, I came up with these 3 ideas for the packages, because that was always a struggle. They talk about the 3 options. There's all psychology in that. So I thought, wow, what are the 3 things we can offer as accountants? So I came up with these packages, the yesterday, the today, and the tomorrow package. I thought, wow, that's brilliant. I mean, I just love it. So, and the yesterday package is what we're all used to doing. It's all the compliance work, you know, the payroll tax returns, sales tax returns, and it's basically looking backwards. It's looking what we did before. It's what we do as accountants. And I kind of, you know, when I talk to them, I talk exactly like I'm talking. It's kind of like looking back at yesterday. I mean, it has to be done. It's like flossing your teeth. I mean, you know, so, and that's, you know, one price. And then I have the today package, which is we look at the stuff today. It's what, you know, how much is in the bank today, payables, receivables, what's in today. And then we have the tomorrow package. And that's why you're in business, to build an empire. And to do that, we have the compliance work done, that's required. Then we have the today, what we own, but that today will determine how we're going to change tomorrow. Today is going to change your future. So where do you want to be in 5 years? What's your story? Tell me your story. Why did you do this? And I start talking about, you know, the tomorrow. And I say, okay, so which one would you like? Do you want to, you know, talk about yesterday and what happened last week or last month or last year? You want to talk about today, how we're doing? That's important. Or do you want to really build an empire? Tell me, which package would you like?
Right. So do you have it actually outlined like that on your website?
I don't have a website.
Oh, even better. So we need to get you a website and put a video of you just explaining what you just explained.
I actually just I just contracted with Rootworks to get one, but, you know, I just never had one.
Explain, Deborah, why you're valuable to your clients. What did you say to me about changing the future, changing tomorrow? You are making empires with your clients.
Well, that's what we do as accountants. I mean, we're so used to being in the compliance work, you know, that we would go and take our time, you know, because we only have 168 hours in the week. That's all of us are given. And we were taking our time before and, you know, taking those stack of 500 checks and handwriting them in and, you know, looking at stuff. I remember when I started as a CPA, you know, 25 years ago, we used green ledger paper. Our tax returns were done by hand. If there was a mistake, we penciled it out and to make sure every page was right. The only electronic thing we had on our desk was a calculator, you know, no computers, nothing. We took the CPA exam, I remember in Florida, and by hand, you know, twice a year it was given.
Yep.
So we did all the compliance work back then. And then with the technology advent, you know, now we have computers and the downloading of the transactions and the apps and the QBO and all that stuff. That doesn't mean we're not needed because, you know, people think, oh, it's electronic. I can do it. Anybody can do it. Well, no, you have to know what you're doing. Now, you know, like, but I can have a client. And I said, get your coffee in the morning, sit there at the coffee and go through the transaction and click them. If you don't know, put them into an account called Ask Debbie. And then I'll go through and I'll look at them once a week or once a month, however much you contract me for, we decide is good enough. And I'll put them in the right bucket. And I'll make sure that your receivables, payables, all of that stuff is right. Because from that information, we're going to determine where you are and where you want to be. That you have to tell me. Where do you want to be in 5 years? What's the dream, the goal, the reason you started this business? You had an idea. What is it? What's your story? Tell me your story. And I get them to talk about what it is they want to achieve and what they want to become. Tell me about your kids. You spend enough time with them? Do they want to go to college? Blah, blah, blah. Like if it was, Seth, I said, tell me about your dogs, and he'd tell me all about his dogs, and all that stuff. And I'd get involved with the dogs. I don't even have dogs. Don't like dogs. Sorry, Seth. But, I pretend. And it's just, it's talking about them and then seeing where do they want to be, taking these numbers and saying, okay, if we do make this change, this will happen. And, they get all wrapped up in, oh, my gosh, Bill.com costs 49 cents for an e-check. And I just go crazy. And I say, what's your time worth?
What is it? Wait, I love that one because then I like to say, what does it cost you to print a check, the time it then takes to stuff it in an envelope, put a stamp on it, go to the freaking post office?
Yeah, they never put a value on their time. And I really talk, time to me is the most precious commodity that I have.
Yep.
We all get the same equal amount of time. So I say, do you want to spend your time stuffing envelopes, running around the thing, doing that? Or would you rather sit on the beach? Would you rather get a new customer? So
not to mention the incredible added security that goes with using a service like Bill.com as opposed to having checks around, which I've had clients who have had bookkeepers who they left them with signed checks and said, well, I'm on vacation, pay my bills. And the bookkeeper said, oh, I'll just write a check to cash. I'm going to borrow $500. I'll pay it back. It's okay. Right?
Yeah, I tell people all the time, I say, client, your staff does not steal $1 million. They steal $1 million, $1 at a time.
Yeah.
So,
it's incredible.
And tell us about your success story, Deb. Your biggest success.
My biggest success story when I started this thing, and I learned all of this by going to the Sleater Conference, Scaling New Heights, QuickBooks Connect, and talking to all of you and going to these seminars. I'm not a genius in any of this stuff. All of you guys are, and have taught me that I've used and translated into my business. And I heard about the CFO services thing, and I thought, I could do that. So I went home and somebody called me up and I said, yeah, I do this CFO service stuff thing. I have no idea what that is. And went down, did an assessment of their business, and they said to charge for it. So I charged $1,500, and I sat with the staff and came up with this fancy report, and said, this is what I would do if I were if this is where your problem, this is what you do, and this is the solution that I see. And that was like putting in Expensify, Bill.com, put the product in the cloud and, get blah, blah, blah. So they said, all right. And I said, now, if I do this, this is what I would do, and this is what I would charge you. And I said, and you can take this and do it yourself, not do anything. It's just a report. So they said, well, we'd like to hire you to do this. I said, well, which package? We want that big package. Okay, great.
Was that the today package or the tomorrow package?
That was the tomorrow package.
Okay.
That's the tomorrow package.
And your client, so I started putting this up from $2,000 in the bank.
They had $2,000 in the bank, and that they had payroll. They had a payroll coming up at $200,000. They had one partner that was very wealthy, and he kept putting money into the business. And he finally said, "I'm not doing that anymore. We need to fix this business or close the doors."
Right.
And so I asked them about their mission statement and what did they do and what did they want. And I really thought, wow, this is a really great idea. I said, well, let's get your stuff in order and let's see if we can make this happen. So I said, but if I do this, I felt like the Prophet guy on that TV show, The Prophet.
Yeah, yeah.
I said, look, if we do this, I am totally 100% in charge. I had nothing to lose with this. And I think that's the biggest thing I find with pricing and doing this business is you have to believe in yourself and you have to have courage. And courage is a choice. So I thought, I am just going to do this. What's the worst that can happen? They're going to say no. Well, I'm no better off than I am now if they say no. So let's go for it. So I said, I'm 100% in charge. And what that means is that if I say we're going to put in Bill.com, I don't want any pushback.
Mm-hmm.
Meaning, well, I don't know why we should do this. It costs 49 cents or $1.49 or, I don't like this, blah, 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 blah. And I'm like, forget it. Trust me on this. You hired me because I know what I'm doing. And, if you knew how to do this, you'd be doing it. In fact, I remember one time I had a veterinarian come to me and he said, I'm going to do this with the books. And I said, give me a scalpel. And he goes, why? Because I'm going to spay that cat. He goes, you're going to spay the cat. And I said, any more than you know how to do accounting. So he got the point.
That's great.
So anyway, we started doing this and we turned the ship in the water. I started to come up with the report so the owners could see. I said, your pricing stinks. You have one partner that's discounting stuff, shouldn't be. You should not be discounting. Discounting dilutes your brand. You should be raising prices, offer packages. And I started the whole thing. And 4 years ago, a year ago, yesterday, they actually closed on the deal and they sold the business for $40 million.
That is amazing.
Did you get your commission?
I should have. And that's what I learned. I learned that after I started with Dan Morris talks about a tip credit or something. You put this in. And I thought I should have had that in a deal. But
what that makes me think of? Yeah, I have a guy in my life who's very much a mentor of mine. And that story reminds me of him specifically because I've worked with him in the past on a company that he took from doing $2 million a year to doing $20 million a year. And then he sold it to a big branding company and cashed out. But I remember when he told me the story of how this company went to him and hired him, and he'd already been a very successful businessman. And he's like a PR guy. And so he knows how to do the PR and take a business and really get it pumped up. So when they went to him, they said, oh, we need to hire you. We'll pay you $100,000 a year. And he said, are you kidding me? That doesn't even pay for my gas. And basically he said, I want in with equity. That's the only way he does his deals. He says, I don't want you to pay me a dime. I'm going to prove myself, and then you're going to give me a piece. Now, I wouldn't suggest that we as accountants go in with a deal like that, but maybe a mixed bag of, give me, I'll maybe even charge a lower fee in exchange for equity in the business if you really believe in a business like that.
That's a great idea.
Yeah.
Can I tell a story about that?
Please,
yeah.
I would love to hear.
So before I started my flat fee prices, the plan we were going to do was we were actually going to do what you just said, and I implemented it for about a year. And the way that it worked was we were going to be paid strictly based on their revenue. So I had a 1% package, a 2% package, and a 5% package. And that's on revenue, not on net profit. And the sales of it was really easy, and it was a two-part kind of package. It was one where we did your accounting, and it was two where we helped you with your marketing and kind of business coaching, which Deborah was, as I listened to her, I was kind of like, yeah, this is exactly what we used to do. This was, we'd come in there and we'd say, because we're getting 2% or 1% or 5% of your revenue, I have an interest in making sure that you make more and more money. So you don't have to incentivize me to build your business. I'm going to almost be ready to be in there working it so long as I'm making this percentage. The sales piece, where you're actually trying to sell the client on that, was not that difficult, because from where they sat, they would there was a guarantee on the 5% one, which I'm going to talk about here in a second, but they would listen to it and say, okay, well, I really want to grow my business. I want to do all of these things. And the 5% package, the 1 and the 2% package were basically, we do the work. If your revenue goes down, we suffer. If your revenue goes up, we make more. The 5% package actually came with a guarantee that said that if within 24 months, if we did not increment your business to a certain point, we would discount the package back to like the 2% package. So we were kind of putting it on the line that if you didn't see this increase in value, which we would be paid on, of course, that we would then discount the package back to what it would have been had you be a 2% customer. So the sales were great, everything was great, so why don't I do it? The problem because we sold it to probably 30 or 40 businesses, some of which I still have to kind of do today because they're still stragglers on, they're still on that package. But a great majority of them would not actually participate in the business growth piece, which became extremely frustrating. I hired a marketing, like a marketing vice president that had 12 years experience in an ad agency. I hired a practice management consultant and expert that we were putting huge resources, hundreds of thousands of dollars, honestly. These people are not inexpensive, into this idea because I was looking at those 5% packages going, I'm an equity owner basically, so I can grow this thing and I don't have to do any of the work. You could not get those folks to show up to the office to have a meeting about their business. It was shocking to me. And it was kind of like, and I'm not a bad salesman, and I've got a little bit of Deborah in me where I can get on the phone with somebody and say, hey, you're either going to come in or I'm going to come over there and drag you out of your office. So which do you want? Right. And you could do all of that, and they'd say, Chris, I know. Don't yell at me. I know. You know, you get a lot of these clients, they want a father figure almost. And so it's kind of like, don't yell at me. It's just so hard. And I'm like, you know, you run a company that is closed on Fridays, and we schedule meetings on Fridays. So there's literally no reason you're not coming to this. So to kind of wrap it all around, I love the idea of getting, you know, more stake into our clients. But as you'll see in a second, I almost pivoted my accounting business to be just the opposite, where instead of doing that, because I almost felt burnt out by it, instead of doing that, I became very much a volume guy, where my business is based on volume now.
And this is probably a good point, Chris, to sort of talk about the specific thing that sort of motivated me to want to bring you on today, because, and I'll share a quick backstory on this. So a bunch of you, I think, were there when Chris had joined us and showed us Tax Planner Pro, right? So after doing that ZIBWAM, that Zoom in between wall and main, a colleague of mine reached out to me. He's an enrolled agent here in California, and he said, you know, I watched the webcast with Tax Planner Pro, and he says, I'm really interested. Can you introduce me to Chris? I said, of course. Introduced him to Chris. Meanwhile, this guy continued talking to me, and long story short, we started having conversations about sort of joining forces a little bit in a somewhat informal way, where we wanted to say, hey, if somebody comes in his door where he does the taxes and doesn't really do the financial accounting and says, hey, I need my taxes done, and I need somebody to help me with the financial accounting. So we wanted to sort of join forces and come together with sort of combined pricing so that we could work together. And on the other side, if somebody comes in my door and says, hey, I'm coming to you for the financial accounting, but by the way, do you have somebody who can do my taxes for me? And that happens all the time. Then I can put them through the same program and say, so here's what it's going to be. Here's going to be your monthly fee, and this includes the tax prep. This way they know exactly what they're getting. And I love that idea. And this was a guy that, long story short, I have both personal and professional mutual acquaintances with him. So he was somebody I was able to sort of vet as somebody I could very much trust very quickly, because that's a big factor for me before I'm going to work with somebody in that way and trust my own client stuff with them. So anyway, he talked to Chris, and he said, I love Tax Planner Pro. I want to offer it to my clients and do the tax planning services using Chris's product. And I said, great, I'm glad I made the introduction. Then one day he calls me up and he says, by the way, have you looked at Chris's pricing tables for his tax and bookkeeping services on his website? And I said, no. So we went over and he had me go look at Chris's services. And mind you, up until this point, and for a while now, I have been of the mindset that I don't want to service it's not that it's a hard line, you know, here, but based on my experience, the kind of clients I've wanted to service, at least for the consulting, my training, I'll train anyone who's willing to pay me, you know, for my training packages. But on the consulting side, I really wanted to focus on clients where I could charge essentially a minimum of $1,500 a month. And what that has translated to, for the most part, are companies who are doing at least $1 million in annual revenue. So the bigger companies in the small business arena are what I had been starting to focus on. And when I looked at Chris's pricing table, and Chris, I'm going to ask you to share your screen in a minute to show this to everyone. It almost like it was like it opened up my eyes, and I said, you know what? We can do this for the smaller businesses too. And that's what this guy Steven was essentially trying to impress upon me. And I said, you know, it may not be what I was originally targeting, but I can see where this could really work, and we can do business based on the volume and still provide. My concern is I don't want to mass produce and sacrifice quality just for the sake of generating numbers. I wanted to do something where I could still provide the value, but also do the volume and try and find that balance. So Chris, why don't you go ahead and share your screen, because I want everybody to see this, because I love the way Chris does his pricing. And going to what you were just explaining, Chris, if I understood correctly when I studied your pricing table, this is the base package, but then, as I'm sure you're going to scroll down in a minute, it then breaks it down by level of revenue. And this is what opened my eyes, and I said, holy crap, this could really work. And as I studied the table and I was looking at your prices and looking at the revenue range, I got the sense that your starting point on this appeared to be based on about 2% of revenue. Am I correct?
That's right. And to kind of build on what you're talking about, my pricing table starts not with what I wanted to offer. So to kind of go through how and I'll be brief with this to some degree, but when I created these prices, I started to say to myself, not what do I want to offer the client? I'm going to get to that here in a second. But I asked myself, what is the client willing to pay? What is the supply and demand of that client? So I put myself in the mind of someone who has a $200,000 business, maybe $50,000 worth of expenses. So maybe they make $150,000 a year, a small operation. What are they willing to pay for accounting? And I came up with 3 different price points that I thought were within their budget. Then I said to myself, okay, for that, what am I willing to do? What am I willing to actually jump in there?
I'm sorry, I want to stop you there because I think that's really important, because I think a lot of us get hung up initially on, because of all this buzz about value pricing, we get hung up on everything up to that, what am I willing to do for this? And we get stuck instead on, what's the value of what I'm offering and trying to come up with a price based on that. And this is where, and it goes back to one of Dennis's questions that's in the chat, what's the difference between value pricing or power pricing and fixed fee pricing? Well, power pricing, first of all, is kind of a term that I coined on this, because the thing that bugged me about what I was hearing about how quote-unquote value pricing works is that it seemed to be based too much on the perceived value in the eyes of the customer. And there was no emphasis on, what do I want to get paid to do this work? And I think that's where it gets really important to emphasize, Chris, what you just touched on in your last sentence before I cut you off, which is, what am I willing to do for this? How much do I want to get paid for what I'm willing to do? I think that is where the emphasis has to be, and it goes back to my supply and demand rant where, you and I can offer the same thing, but that doesn't necessarily mean we can command the same price for it, because you or I have a difference in terms of what we have created in the marketplace as far as demand for what we offer, even though we offer the same exact thing. If more people want it from you than want it from me, then you get to charge a higher price. And that's economics 101, and that's what drives pricing more than anything else. I don't care what the value is. It's all about supply and demand. So now I'll go back to you, Chris.
Sure. And one of the things you'll notice about mine, which is almost kind of in contrast to what Seth is doing and is going to talk to us about, I am really targeting the 0 to 1 million group, where Seth's power pricing model in a lot of ways is geared towards, it doesn't maybe have to be totally 1 million, but Seth, would you agree it's 600, 700,000 and up?
Yeah.
These businesses that are becoming bigger than one-man operations, even wealthy one-man operations, because they need more stuff. So my whole system is kind of based on the idea that I'm not going to have pricing conversations, because I believe I have figured out what these folks are willing to pay. The conversation becomes much more about, is this everything that you need? So when you come back up to the packages, my very basic package is quarterly bookkeeping, your tax returns, and email support only. This does not come with QuickBooks Online. This does not come with Tax Planner Pro. There's no tax planning.
How do you get their information to do their quarterly bookkeeping? What is it you include in the quarterly bookkeeping activity?
I'm just producing a quarterly financial statement, so an income statement and a balance sheet.
Okay, so they send you 500 checks per month and a bunch of deposit tickets.
So let me show you what we do about that. So the quarterly bookkeeping is set up on QBO. So we connect their bank accounts. It's all after the fact. They're doing all of their own check writing. They're doing all of their own deposits, all of that kind of stuff. Now, right below my pricing right here, look in yellow. No handwritten checks. $3 per check fee for each business check that is handwritten. Because handwritten checks in my group is what actually destroys my efficiency inside the firm. We've figured out what our bottleneck is. And it is when people do things outside of what the bank feeds will tell me. They're doing all their own invoicing. They still get access to QBO, but they have to pay for QBO because we're not paying for it in this package. In this package here, it goes to more of a monthly. We're adding some more support features. We're adding some limited IRS support. We're actually offering QuickBooks Online. Now, there's a reason that this package and this package is priced a certain way, starting at least, and that's because I don't sell very many basic packages. I've got 350 business clients that are on one of these packages. And of that 350, only 4 of them are on this package.
Well, and I'm sorry, Chris, let me stop you there for a second, because I want to point something out that really got me, like when I was looking at this, and where I really felt that there is true genius in this, which is that when I see this basic package from the practitioner standpoint, I'm thinking, how can I kind of mimic this and learn from what Chris is doing here? I see email support only, and I think I can already visualize the conversation that's going to happen with almost anyone who signs up for this to start with anyway, is within a short time after they sign up for this, they're going to say at some point, hey, I know that this package includes email support only, or they just ignore that part and they just call up or they email me and say, hey, can I schedule a phone call with you? The point I'm getting at is in a very short time, I'm guessing, the conversation is going to be had where I have to say to the client, no problem, I can give you unlimited phone and email support. I just need you to upgrade to my pro package.
That's right. And we even do it as part of the sales meeting, where we say, now, one of the major drawbacks to the basic package, which is what you're considering right now, is that it's email only support. So are you okay with that? Because we won't have any face-to-face or phone meetings. And immediately their face kind of drops and goes, well, what's this package good for then? I say, it's like LegalZoom for your accounting. It is literally where we're just doing the work. We do not have a personal relationship with you. We do not have a professional accounting relationship here. It's $150 a month. There's a lot of other things that cost a lot more than $150 a month where you don't get business and personal tax returns. It's a very good deal. And it's also meant to compete in the market with some businesses that are even lower priced than this. And it's important that as accountants, we know there are some very well-funded large firms that are trying to be the absolute discounter in doing accounting, and this is meant to kind of combat that a little bit. But like I said, only about 4 clients are in this package. About 5% of my business is on the pro package. And generally the reason people will be on the pro package is not because they don't want what's in the elite package, it's because they're multiple business owners. So I'll have a business owner that for some of their businesses are in the elite package, and then for their rentals or something else are in the pro package. So I count all of that in general as different relationships to some degree because they're owned by different people, that kind of stuff. But this offers a little bit more. And then my elite package, and I'm going to show you something, an anomaly of the pricing of the elite package. The elite package offers everything. It offers weekly bookkeeping, unlimited phone support, email support, all kinds of stuff. One of the things that's very important about this particular package, which is, again, geared to someone who is $100,000 to $400,000 in revenue. That's my sweet spot, basically. And I have the RF $1 tax guarantee. And what that is it is, and I explained this to Seth when we were talking about it a few weeks ago, I think, when I was back in Missouri. It is a guarantee that I will show the client how to get down to $1 in tax every year. It doesn't mean that they'll do it. It just means that I will show them how to do that. And that is a very powerful argument to make to this group. But something about a pricing anomaly here, you can see how it's priced based on revenue. So as your revenue goes up, generally these prices are starting to tick up. But something that's important to see is, see how this elite package, it's $299, $299, $299, $399. That's because if somebody comes in, I'm trying to sell them the elite package. And I'm not actually going to discount that based on whether you make $100,000 or $200,000 or $300,000. I want $300 a month for that regardless, and because I think there's a lot of value in it. So this has been extremely helpful in our sales piece because we don't have people trying to figure out, should I tell him I'm a $100,000 business or a $200,000 business? It all works out. And finally, and I'll kind of wrap up here, I have add-on packages for if people want other things. Deborah, you were talking about what if they want us to do invoicing or accounts payable, that kind of stuff. This is a flat fee that we add to their packages to do that kind of thing.
On the accounts payable, is that like Bill.com?
That's like Bill.com.
Who pays? You pay for, if they have you pay for the whole Bill.com charge? Because I have one client that my Bill.com fee is $250 a month. I wouldn't make any money then.
Well, and if you've got clients like that, I mean, how much does that client make?
Does that client have all their vendors on ePay?
Well, ePay checks, I mean, you know, their Bill.com fee runs about $200 to $250 a month. And I'm like, gee, if I offered, because I saw this and I thought this was brilliant. And I thought, wow, $250 a month. If I, you know, am I making money at that point? You know,
I think what you can do on something like that, Deborah, and there's two tricks to this, because I think one, in most cases, $250 a month is going to more than cover. So even if you lose money on one client with Bill.com, all your others are going to make up for it. But the trick to that is when Bill.com is sending out checks on your behalf, they're charging you $1.50 per transaction. The trick is to, as much as possible, go through their payees and turn them all into ePays, get it down to 50 cents. And, you know, because all the major credit cards are already in the system. It's not like you need to have somebody on the other end accepting an invite. You just go and say, set up ePay with their Visa, MasterCard, and they're in, and it's just instant. So, and then the trick is to deal with the ones who, you know, where you do have to get somebody to accept the invite to ePay and try and convince them to do that. That's how you scale it. But the other way is to put a limit on the number of transactions that you'll process at that rate and say, you know, $250 a month is for up to so many transactions. And then after that, it's going to be this much more until you go. Okay. So you set up tiers just for the Bill.com pricing.
And I just have not run into I just have not run into a situation where I didn't make a lot of money on these. Right. So I've left them the same way.
What product do you use for invoicing?
We're using QBO to do their invoicing here. So I've got my guys just going in, gals and guys going in and doing the invoicing for people. And we have a portal that see this? We have a portal where they can come in here in the bookkeeping side and actually make invoicing requests and stuff. And so we use that as a template for them to use to request invoices, or they'll send us they'll send us quotes or proposals that they've done to where we just do the invoicing on our own. A couple of things before I wrap up that I want to emphasize here, and one has to do with the add-on packages. I'm a huge believer that payroll is way underpriced when we do it.
Yep.
There is no reason to be doing payroll for less than what I'm charging right here. And one of the secrets of my little system here is most of the folks that I bring on are S-Corps and are small S-Corps that need what? That need payroll. Most of the time, I end up selling this package right here, and I outsource it to Gusto or Sure Payroll for 1/4 of what I'm getting for it. So not only am I using the profit here, I'm not selling this right away whenever they come in. I'm not saying, well, I'm going to charge you $299 a month, plus I need to set you up on payroll, that kind of thing. I sell this about 3 or 4 months later. And the way that I do it is after they've signed up and we've onboarded them, we have a pretty extreme onboarding process. But once I've done that, I come back in and I say, now, we talked about in the meeting about payroll, that you could do your own payroll or that we could do it for you. But either way, I need you doing payroll. So what do you want to do? And you haven't set it up yet like we talked about in the sales meeting, so are you wanting us to do it? Sometimes they'll go and do it at Gusto on their own. For me, that's nice because payroll is a big pain in the butt. But if they say, no, I need you guys to do it, I have no idea about accounting, that's why I hire accountants. If I have to hear somebody say, that's why I hire accountants again, I'm just going to go crazy because I feel like sometimes I'm like, do you say that to your doctor? That's why I hire a doctor, is because I don't know anything about medicine. It makes me feel so like it's just a necessary evil. But at the end of the day, we can sell that payroll service to them and make quite a bit more money because we just put it right on Gusto or Sure Payroll, depending on what kind of payroll it is. See, the interesting thing about Sure Payroll is I can actually get paid from Sure Payroll if somebody wants to do it on their own. So let's say I have a client that wants to do their own payroll and pay Sure Payroll like $45. Well, Sure Payroll will give me a $10 per payroll rip on that just for the referral. So I can actually make money on the referral that way, or I can run it myself. And then finally, we're doing some corporation setup for folks who have simple corporations in Florida or other.
Now, when do they come to you and they already have a system in place, or they've got a shoebox? I mean, once you get them going, this works great. But I have one guy came to me, had 18 months worth of stuff. It was a car dealer, with I'm like, I can't do it for for even $600 a month. I mean,
So-
just to even get them where we could even do it, it's going to take.
So we're kind of getting into the onboarding process, and that's why I say I have a pretty big onboarding process. So there's two things that clients come in with. They come in with a back work need internally to us. They come in with a back work need, and then they come in with a future work need, right?
Right.
The back work is a worksheet that we fill out where we are basically quoting to them what the back work's going to cost. And we have some standard pricing that we use for some of that stuff. But at the same time, what we tell them is, because here's what I used to get. People would want to come in with all their back work. I'd do all their back work, and then I'd say, hey, I'm ready to start the regular package. And they'd go, radio silent. You know, it's just they're gone because the back work's done, and now we're going to see them a year later with the back work again. It's because they don't want to pay. So the way that we set things up is they have to start their package today. So the $299, as soon as you sign up, starts. Also, you have to put down 50% of the back work charge.
What's that usually run?
It depends. It's usually somewhere around what this monthly fee is.
But for every month that you have to catch up?
That's how I do it. In fact, I just took in a client on that very basis. I had quoted him $500 a month for the bookkeeping work because he's a small business, and I figured I could do it because I can streamline things and make that work for me. And then when it came down to starting the onboarding process, I don't even do 50%. I said, okay, we've got to catch up January through July, so I need $3,500 to start up. And I sent him a link to go make that payment. And it's a subscription that I set up through WooCommerce where I'm allowed to, it enables me to say the startup fee is actually $3,000 and then it's $500 for the month of July. So I'm a little different than Chris in that I just charge the same monthly fee for all the back work times the number of months that I have to do. Because I have to do that work.
I'm going to look at something. Hold on.
So, you know, and he balked at it at first. And then at one point I almost backed off and said, you know what, I'll knock $150 a month off on the back work. And then we talked about it. I said, you know what, no, the whole point is that I don't want to be nickel and dimed on my rates. So I actually went back to it because we were still kind of negotiating. He was thinking about it. And I said to the guy, I said, you know what? I said, to be honest, I said, I like to go into an engagement feeling good about what I'm doing and feeling like I'm getting paid really well. And I said, I'm honestly not feeling that here. I said, I'm feeling like we're, you know, haggling on my rates and I'm not, you know, I don't want to do it. And I said, so I need to go back to, you know, what I originally asked for, which is I need the $500 a month times the number of months we have to catch up. And, you know, and then also the, you know, so effective July, the $500 a month also kicks in. So even if by the time we get into August, I'm still doing the work, he's still going to keep paying me the $500 a month. And the reality is I'll probably get that back work done within a couple of weeks. You know, because I have the tools at my disposal. I can use Transaction Pro Importer to import a lot of stuff really quickly. And, you know, so that's the beauty of this is that the pricing, and this is where I get into my power pricing rant, where I feel like the power has to be in our hands to command what we want to get paid and feel good about it. You know, so that, because I don't want to ever go into a client's work and be distracted by thoughts of, I'm not getting paid enough to do this. And now I'm stressed out because I'm trying to, you know, trying to hustle and get the work done as quickly as possible because I feel like every minute is another, you know, a bit of money lost. So, you know, I want to be able to look at it from the standpoint of I'm being paid so well that I don't care about the time. And that way I can feel relaxed and take my time to really focus on doing a great job. And I can do a great job because I feel so good about what I'm getting paid to do the work. And that's the sort of mindset I want to go into this with. If I don't have that mindset going in, then I'm not charging enough. And I would rather pass up on the client and wait for somebody to come in who sees the value in what I offer and what I want to get paid and has no problem saying, Seth, you're worth every penny and more. Here's my payment. Let's get started.
A lot of that has to do with how you, the confidence and the courage is when you're selling your packages. Mm-hmm. You know, and I think that a lot of times, a lot of our colleagues just are kind of, oh, I hope they like me, you know, so I'm not going to charge enough so I get the job and they like me. We have to go in with really a high value of what we do and the difference we can make in their life. So I think that's, and I know back to your comment about, go ahead.
Let me show just a couple more things, Seth, here, and then I'll jump off here. So
sure.
What is BOP? Full year of BOP. What's BOP?
I'll show you here in just a second. This is the back work formula. So we're calculating this. See how it says deposit due now, deposit due upon completion. So we're charging 50% of our back work calculation up front. And 50% when we finish that back work. Now, whenever I come back over, this is the BOP business owner package is what that stands for. And this is the BOP actual engagement letter. And you can see here, what we do then is we show the client, here's the total fees from the back work worksheet. You owe this now, you owe this when that's done. These are the entities covered. Here's what's coming in the new BOP and the monthly fee. So we get their deposit of 50%, plus we start their credit card on the monthly package the day they sign up.
Mm-hmm.
So that's where, then when we do the back work, we bill the rest of that right on their credit card. It's understood. We just send them a note that says we're billing the rest of the back work because you've got it, and then we just keep going from there.
Do you do the back work before you start the monthly, or do you do the monthly, get that going, and pull in the back work?
You get the monthly going right away, because if that back work takes 6 months, I still want my monthly fee. And here's the secret to, you know, published pricing. This allows your staff to have confidence in selling things, because this is ironclad. They can't change this. This pricing table, they offer it to the client. They say, this is how it goes. As far as whenever we're doing the back work, I want them to get kind of into me with 6 months worth of payments, but we haven't done the work yet. Why? Because the longer they're into me, you know, kind of paying me, but haven't received their stuff yet because they're slow with their back work, something like that, I am making money. And at the same time, it's very difficult for them to decide to just pull out, you know, on any given month, because you're almost prepaying me now. So somebody who comes to me today and didn't do any of their 2015 stuff,
right,
get caught up with me on 2016 and 2015, so that when we get to the tax returns in 2017, spring of 2017, they've prepaid me for all of it.
So
I'm prepaid.
Are they, so the monthly work, like, okay, we start today, they got all of 15 to catch up. Are you hooked the bank up and starting to do, I mean, and then you pull in the back work in the current stuff? I mean.
No, I'm not starting the current stuff. I'm just starting the billing.
Okay, so you could basically be doing nothing until they actually get, okay, all right.
See, my stipulation when I start like this with a client is that before I'll even start the work, I need to have everything, because the concern I end up running into is that, you know, they pay me, I get started, but I don't have their bank statements or access to their bank accounts or any of the things that I really need to get the work done. So like this guy that I'm actually starting with next week, and I've got to do his back work for January through July. When we discussed it this week, I said, I can get started on Monday, but the only way I'm starting on Monday is I have everything that I need before then. And I listed out what I needed. I needed, you know, he runs a lot of his business through PayPal. So I needed either access to his PayPal account or the information. And I told him exactly what I needed downloaded from PayPal in order to do the work. And I needed the bank statements in both PDF and CSV format, or access to the account such that I could log in and download that myself, and on and on. So I'm going to, over the weekend probably, go through his previous books. He was using Indinero. And get the trial balance figured out so I can post that onto the books to start off this year. And then I'm going to start importing transactions and getting it all set up on Monday. So that's how so the back work, I start with the back work and kind of catch up with today. But the idea is I'm going to put a lot of energy and resources into getting it caught up very quickly. So my goal actually is to have all of his back work done in the space of next week. And I'll just block out the time. And the other thing I do is I do all the work myself for the first 2 to 3 months. Because what that does, it may not be the most efficient way for me to run things, but it gets my head so tightly wrapped around everything that needs to go on for their business that then when I do turn it over to Erica, who's my assistant / bookkeeping, I call her my managing nerd. That's her official title, is she's the managing nerd. I'm the chief nerd. She's the managing nerd. So when I turn it over to her, I can give her all the guidance she ever could want in terms of understanding what needs to get done to keep this client going and to keep them really happy. And then I can do Deborah's future plan with that client and start working on, I love what you said, Deborah. A while back, we had a discussion in one of the Facebook groups where we were talking about reports that we run for our clients. And you came in there and I loved what you said. You said, these are all history reports. I like to run let's make history reports. And it goes into where, you know, I unwittingly stumbled on kind of my sort of numeric version of your future package, where years ago, my wife was kind of watching me, as I was in a session with somebody doing cash flow projections. And after I got off the session, she said to me, she says, I don't understand how all these clients come in your door with the messes that they come in with. She says, didn't they do what you did when you started your business and run all kinds of numbers and build spreadsheets? And because she used to make fun of me about this. When I was still working at a CPA firm and I was looking at starting my own business, I said, all right, how much can I charge per hour? How much can I get paid? Will people be willing to pay me? How many hours do I need to bill? And how does that translate to how much money I'm going to make? And is that going to be enough to pay all my bills? I had a business model, and then that flowed into a personal model, and I looked at it all and made sure that I was very confident before I went out on my own that I could bring in enough money to pay for everything. And when she asked me that question, and it never even occurred to me to do that for a client, but when she asked me that question, all of a sudden it all came together, and I said, holy crap, I've got to start doing cash flow projections for clients. And years ago, I started by doing a webinar saying, all right, I'm going to do Nerds cash flow projections. And it was based on what I had started to do for myself long after I was in business, where I would dump my monthly balance sheet, my monthly profit and loss into a spreadsheet. I would build the statement of cash flows from that, also on a monthly basis, get it all to balance. And then once it's all balanced, I can build any schedule I want all day long and flow it through the balance sheet and the P&L, which will then flow over to the statement of cash flows. So I can look a year or 2 years out and say, this is how much money conservatively we can expect to have in the bank. And so when I held that webinar, I was all excited. I'm going to get all these business owners, and I charged like $50 for the webinar. And 90% of the people who signed up for it were CPAs. I was shocked. But I realized it's because a lot of CPAs, who obviously have the accounting knowledge, they still don't have, and they have the basic Excel skills, but they don't have the really strong Excel skills to write these formulas and build these kind of models. That's where you get into your MBAs and your finance majors, not accounting majors, who know.
So when's the next cash flow webinar?
I have 2 recorded ones on my website, actually, that you can download. And I'm going to do another one soon because it's time to do an updated one. That webinar, though, still sells at schoolofadvancers.com for $97, and you can download. It's a 3-hour recording where I walk through the process of running those reports in QuickBooks, exporting them to Excel, and then getting that statement of cash flows to balance. And then I go through how to build a few of the sample schedules. I think we did a payroll model and an effective interest table because, like Deborah, the first thing I like to do is look at the client's whole picture and say, do we have debt on the books? Because if we do, the first thing I want to do is get that debt paid off. And at the same time, we're going to fund an account so we build our own internal line of credit so we're self-funded. And the idea is the first goal is, because basically the way I look at it is, if I'm paying interest on debt, I'm throwing money into a fireplace called bank of wherever you do your banking and borrow money from.
So Seth?
Yes, sir.
Is this cash flow going to be updated using QBO?
I think I'm going to, because I just did it for a client now with QBO. And what I'm also probably going to do, and some of you are not going to like this, but we're going to use Google Sheets instead of Excel.
I might like it. I don't like Excel.
Well, I'm pushing Google Sheets because it's much better on cloud-based collaboration than Excel is.
Right.
If you're comparing it to Office 365, Google Sheets is still light years better than Microsoft Excel, in my opinion. So, the other thing I wanted to do, first of all, we have some questions in here, so I want to make sure all the questions get answered. So let me kind of zip through the chat here. One thing, Chris, and this is a good question. Somebody asked it in the chat. The concern, I think, I know I had it when I looked at your prices is, and obviously I'm not asking you to divulge any sort of, secrets, but the assumption is obviously you're able to do this at those rates and still be profitable. But I think some people are kind of wondering, how are you able to be profitable doing tax returns and all the bookkeeping for just $200 a month?
So I have a video where I go through some of my financials, and Reagan Financial does about $1 million on the accounting side, revenue-wise. I have 5 other staff people where my payroll is about $280,000. My total take-home from my firm is about $640,000, something like that. And I'm very
that includes tax prep?
And it's from accounting and tax prep and payroll and everything that's on the accounting side. I have another firm that does where we do investment management, and it's even better. I'm telling you, investment management's a great business. But the reason I say that is because it's about how do you do 350 businesses with 5 people. It's not about what the pricing is so much. Now, if I were doing the kind of work that you do, where it's very customized and involved and great, I would not be able to do that with 350 clients. This is very much a cookie cutter. You're running through McDonald's drive-through at Reagan Financial.
Mm-hmm.
And if you say to me, I want a cash flow report, you know what we say to you? That's going to cost extra. If you say you want some customization, that's going to run extra. Now, something as a CPA and primarily as a tax CPA, that's what I was trained at KPMG, is I believe the bookkeeping is around 2 to 3 times harder than the tax work is. And I will say something even more shocking. If there's tax accountants on here, it will shock them. The income tax business that you are so used to, within 5 years, will not be what you're used to.
I agree. Totally agree.
It will. I myself am working on a program that will change the way that income taxes are done. And if we rely on that as accountants, we're going to lose. So the bookkeeping and the financial side is much further away from being able to be automated in the way that we talk about so much as futurists. So there's no program in QuickBooks that helps people understand whether it should be on the income statement or the balance sheet, right? Like if they go to Walmart and it runs through the bank feed, there is no way other than a professional accountant looking at things to understand whether that's an asset that needs to be capitalized or an expense that needs to go on the income statement. That's not going away anytime soon because bank feeds aren't any smarter in 5 years than what they are really right now. What I do believe is that if you can figure out how to make your practice super, super efficient, where, for instance, most of my bookkeeping is allotted about 12 minutes a month, each client, by each staff member. Our tax returns are 1120s. On average, the staff time in them is about 20 minutes. That's a lot to us. So when it comes to tax returns and how do we be profitable with this, I'm not sitting at a desk agonizing over someone's 1120S for 75 minutes. And what we do is we prepare the financials in a way where they mirror what the tax return is actually going to look like. So if you looked at the financials, you would say that looks just like a tax return does and boils down to taxable income. And that's because we're moving that data straight into that tax return. I want my staff to be able to understand if it's correct or not. And when it is, we just move that return right out the door. We do a lot of work in November to make sure that we're ready for tax season, addresses being changed, things like that. And we hustle. You know what the number one thing that is a killer of our efficiency is the individual tax return and payroll. Payroll will destroy efficiency if you're not making enough money on it. And individual tax returns have become brutal because as we get the healthcare stuff running through and all of these other things we have to track, it becomes a much larger piece of my overall business. And at some point, I'll have to raise fees. Think about this. Think about accountable plans. What are really supposed to go on with accountable plans? We're supposed to have all these S-Corp owners like reimbursing themselves for car and things like that. We're not supposed to just let them run things through the business without an accountable plan. Well, who's going to set up the accountable plan? Who's going to reimburse it each month? Who's going to make the expense reports each month? That would cost $75 a month if I just had somebody doing it on the side. Clients don't want to pay for that. So all of this bookkeeping is what is the hard task, and the easy task is the tax piece. So I don't know if I answered the question, but I definitely talked for like 5 minutes.
Well, I want to get to some more of the questions, but no, that was great stuff, Chris. Larry, actually, if you can unmute, the first question in the chat was actually from you. And I'm not sure if there's a typo in here. It says, so my question is, if you were starting out today from scratch and working seed was 1/10 of what Seth does, how would you begin developing your pricing? So I think
Scratch.
with working scratch.
Starting from scratch.
Starting from scratch, and it says working C. Well, the bottom line, I think the question is, what do you do when you're just starting out and you don't have the experience to know what to charge? I think that's what a lot of people face, or even people with experience still feel like they don't have enough experience to know, like, how did I come up with $500 a month? How did Chris come up with $300 a month for his elite package for up to $500,000 a year? I forget where the breakoff actually was. And I think some of you are going to hate this answer, but I think a lot of it's going to be trial and error. You know, and you're going to make a mistake and you're going to undersell yourself, and then you're going to learn from that. And the next new client coming in is going to get charged more because you're going to have learned. I think the best advice I could give in answering that is aim high. You know, because if you aim high and a client balks, you can always come down from there. It's much harder to have a conversation where you say, and I just had this recently. It was funny. I was in a meeting with the client. We were talking about getting started, and they said, okay. And then they went to confirm after we discussed everything I was going to do. And I said, and they said, okay, and what's the monthly fee going to be? And I said, it's $1,500 a month. And the client, without even hesitating, said, that's it? And immediately I said, shit, I should have charged more. And the point I'm making is I couldn't at that point go back and say, oh, you know what, that was too easy. You know what, I'm going to charge more. Right? I can't go back from that and say, you know what, you're right, let's make it $2,000. You can't go up, but you can always come down. So aim high. And
yeah, but don't be discounting to get the job either. Take away services instead of giving a discount. I mean, I really hate when people say, we'll give a discount. No, discounts are for Walmart. You're a professional. Take away a fee. Take away a service.
Yeah.
And one of the biggest things you can do is access level agreements. Okay, well, if you want that price, then that means that you'll only get email support.
Right.
You know?
And the other thing is when you do stand fast on your rates, and sometimes I don't even go into discounting or taking away services like this client I just brought in. You know, here's what I did, and I learned this technique when I was working as a stockbroker. When you're trying to close somebody, one of the most important rules about closing a sale is that as you ask for the order and then you shut up.
Yep.
Once you ask for the order, the next person to talk loses. That's the golden rule. So what happens is as soon as I say, okay, you know, let's get started, the fee is going to be $1,500 a month, I clam up. Now I do the email version of this because in this day and age, that's what we're dealing with. So when when we're emailing about this and the client says, okay, you know, how do we get started? And I send them the link and say, here's my WooCommerce. I set up a subscription for you. It's going to charge you the setup fee, which is based on the back work that has to be done, plus the current month's subscription starts. You know, so in this case, I said to the guy, it's going to be $3,500 a month. I send him that email and I say nothing. And I wait. And then, because then he came back to me and said, oh, can we do anything about the startup fee and blah, blah, blah. And I started to negotiate with him. And then I said, no, this is what I don't do. I don't negotiate. And so I went back and said, you know what? I got to stand fast. I need what I originally asked for. And then I didn't respond. And he didn't respond for a few days. So it was that waiting game. But eventually I wasn't going to respond. If he decided no, then I would have looked at that as dodging a bullet and I'll just move on and get the next client. And so
that's
eventually
where the courage comes in. You have to have the courage and the conviction in what it is that you offer to stand price. I remember we went to see an attorney one time, and I said, how much? And he said, $15,000. And I about crapped in my pants. But I thought, this guy didn't blink an eye. And I thought, I got to be more like that guy. He said, if you want me, I'm this good, this is what it costs. And I said, oh, okay. I mean, I paid. But I thought, I'm going to get more like that attorney. He thought nothing of saying that and just sat back and said, I'm that good. If you want me, pay it. Yep. So I think of him when I'm giving prices out too.
Classic story on those lines, and this was years ago when I was charging by the hour, and I was charging $40 an hour. I was still pretty much just starting out, doing bookkeeping services, putting ads on Craigslist, and getting clients right around here in Los Angeles. And this client came to me, and you know, I met with him, and we talked, and I told him the rate was $40 an hour, and he said to me right there, he says, "Can we do anything about the rate?" And I said, to be honest, no. And so here's the flip in thinking. A lot of us think, oh, I have to, you know, discount my rate to attract in the clients. And my attitude was, if I lower my rate, I'm going to get locked in spending those hours earning less money when I could be making more money with somebody else who's willing to pay the full rate. So my mentality is different. And a lot of these clients are banking on us not having the mentality that I have. So I stood fast on my rate, and I said, no, to be honest, I can't really afford to lower the rate because I have too many people already coming in wanting to pay that rate. And so I would lose money if I took you on and committed the time to do the work and didn't charge the full $40 an hour. So he said, okay, he says, let me go talk to my partner about it. He came back, and what he admitted to me later was that when he had that conversation with his partner, apparently what he said to his partner was, he said, look, this guy must be really good because I tried to get him down on his rates and he wouldn't budge. So he must be worth every penny. That's the perception that you create when you're not willing to falter in what you're charging clients. When you stand that strongly behind what you charge, and you have, like Deborah said, when you have that much confidence and conviction, this is what I need to charge. If you're not willing to pay me that much, I'll move on and go to
bricks, man.
Yeah, that's it. I don't have time. Ain't got no time for that. And I love how, you know, my guy, Mark is his name that I referenced earlier, you know, when somebody offered him $100,000 a year salary, and he's like, that doesn't even pay for my gas. Like, forget about it. You're never going to be able to afford to pay me what you would have to pay me if I was just going to charge you without taking some equity too. So.
And the other thing too is when you're looking at them, they're sitting in your office. If they have an iPhone, they are not price conscious, because they could have a flip phone that would do the same thing. Look at what they're wearing, the stuff they're using, where they're living. Price is a smokescreen they're sending out to see how good you are. And think about it, you know I was used for girls. I mean, we buy Coach purses, Dooney bags, Louis Vuitton. Why do we carry them? They're no different than the ones we can buy at Walmart, but they like how they make us feel. We know they're made better. We're willing to pay for them. We are the Louis Vuittons of the accounting world. We should charge like that. We're not Walmart.
Yeah.
We're Target.
All right, so we're basically out of time, but I want to just glance through the questions here. Adam says, this has inspired me to put pricing on my own site. Had a long discussion, pros versus cons. Some say it takes the relationship aspect out of the accounting. And you have to understand, I think, for some of us, those pricing tables are really just a starting point for the conversation. In my case, I've been standing fast and saying, no, you're going into one of these plans, that's it. I'm not going to sit there nickel and diming and saying, well, I'll take out the service and charge you less. I did that with one client last year, and I'm currently still living to regret it, because I'm not really getting paid what I really want to be getting paid to do that client's work. But I've already made the decision that come end of this year, they're either going to pay me what I want to get paid, or they're going to be finding a new accountant to provide them with their bookkeeping and accounting services.
Now, one of the things too, I think Chris's thing is brilliant. I love it. Now, but I have a whole different business model that I go after. You know, he has a lot of, you know, they fit into this package. My packages are extremely customized. So I can charge a whole lot more because I will include all these customizations. So if you do it like I do, I think charging $150 a month is, I couldn't charge that for what I do. But for what he does, I think it's brilliant.
Well, and it's important to say this, that if we started to try and figure out ways that every client from $100,000 up to $20 million in revenue, suddenly they all need the same thing, we're all going to be in trouble, because there's no way that works. It doesn't work in any industry. It doesn't work in legal. It doesn't work in engineering. It doesn't work in anything. What I think is really important is that every accountant, we had that question about, well, where do you start? I don't see accountants starting with a question before they even think about pricing. And that is, how much do I want to make from this thing I'm about to dedicate my life to?
Yes, that's my point exactly.
Yeah, I mean, how much do I really want to get from it? What Seth is saying is, you need to have an idea of what that is and let that guide your action.
And the barometer is not a formula. The barometer is, like I said earlier, it's a mindset.
Feeling.
What number is going to make me feel really good? When I get a client that says, yeah, I'll pay you the $1,500 a month, and especially when they react like that one client did where they say, that's it, then I'm super excited, because now I know they see the value already before I've even gotten started. And I'm excited as hell to get paid that kind of money, because I know that once I'm done with the the initial 3 months, I'm going to have it so well streamlined that I'm probably not going to be spending collectively more than about 5 to 6 hours a month to earn that $1,500, because I'm going to use the apps, I'm going to use the tools that I've learned how to use to streamline things and get it efficient, so that I don't have to spend all kinds of time. And that's where it's important that it's not about the time. I had one client come in on this basis, and immediately, and it just went all wrong. I ended up firing the client, which is another question I'm going to answer, and then we'll end on this note. Because somebody asked, when is it time to fire the client? So this client came in, and we agreed on a flat monthly fee. And within the first week of us getting started, first of all, she did not she refused to go to QuickBooks Online. So that's a new requirement. I won't take a client on it if they're not willing to let me take them into QuickBooks Online, because that's about streamlining my business and my process and making sure that I can create a repeatable system that's homogenized across all clients so that I don't have to have bookkeepers trained in 6 different ways depending on which client they need to work on. It's brain dead when I have to do that. So that was part one. This client came in and said, nope, I'm not going to QBO. I want you to log into my computer through Go to My PC, which to me is like ancient history in terms of the technology. And I was letting the client dictate how I run my business, which is exactly, it's like what Deborah said at the beginning, where you talk to the doctor and you say, all right, give me a scalpel then, because I'm going to perform surgery if you're going to do bookkeeping. And so, you know, and that was just the beginning. Then, even though we agreed on a flat price, she kept track because she gave us our own user login for QuickBooks. And she says, you've only logged like an hour or 2 in QuickBooks this week. And I was like, whoa. And I said, wait a minute. I said, the whole reason we agreed on a flat price is because I don't ever want to have this discussion with you. I was a little strong with her at that point because I was getting frustrated. And I said, so if we're going to have these discussions, we're going to need to just terminate this right off the bat before we get started, because that's the whole reason that we agreed on a flat price, is because I don't ever want to have this discussion with you. And I said, did the job get done? And she says, yes. And I said, then what difference does it make how much time we logged in QuickBooks? Your bills got paid, your account got reconciled, and it was all I could say short of saying, shut the F up. So going back to when is it time to fire a client? I think it goes back to the same philosophy that I have about when I'll take on a client and how I'm getting paid for it. It's a feeling. When I feel like the ROI is not there for me, I'm investing time and resources into getting the work done for this client. If I'm not feeling good about the time and resources that I'm investing into the client, then it's time to either get the client to pay more or fire them. You know, it's one or the other. And usually that's what it comes down to, is at a certain point, I'm willing to put up with the client's BS if they're willing to pay me to do so. We call that a PITA fee, right? A pain in the ass fee. So, you know,
and that's one of the things about, because we're kind of dealing in some contrasts here, where you're getting perspective, if you're watching this, of what a very customized, highly valuable service is, and then something like mine, which is really running them through a machine. Mm-hmm. And one of the advantages, I would say, is I don't have to fire a lot of clients. That's not something I have to do anymore. I used to, because I used to do things a lot differently. The reason I don't have to is because I have this little thing now where I can say, well, that's not included. We don't do that. I had somebody ask me before we got on here to give them a rundown of research about how to get out of their student loan payments based on what they make. I don't know if it's possible or not, but it's some kind of financial planning question, right? It's not a tax question. It's just something they're like, I don't know who to ask, so I'll ask my accountant. Instead of actually trying to research that or even bidding it, we just say, that's not something we do. That we just don't answer that question. We don't have the resources. We don't know the answer to that question. And if you can say that kind of thing, my program may be good for you. If you can't say that kind of thing, don't do my program, because you have to say no a lot.
Right.
I think that's really big at Scaling New Heights. One of the biggest takeaways I got was when Michael Michalowicz on stage said, the biggest thing you can learn to be successful in your business is learning to say no. Mm-hmm. And I started to do that. I say, no, I can't do that. Nope, I don't do that. Nope, not giving you back any money. Nope, 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 nope. Yep. And the other thing I do with Seth was talking about something that just flew my mind. I'll have to think about it later, but it was really good.
I say no a lot. I say no a massive amount of the time to certain things. I get a lot of questions about, well, can you do this? Can you come to my office? Can you do it this way? And you have to constantly say no under my program, because you'll never make any money if you customize it.
Yep. Oh, I know what it was. What about the hourly rate? I had somebody ask me about, well, you didn't take that much long. I said, if I charged you by the hour, you couldn't pay my fee. I said, because then you're going to pay for my education, my time, my training. So if you are willing to pay me, $500,000 an hour, I'll take it. And then you can pay me by the time, because you can't pay me for what's up here, and that's what you're buying.
That's right.
So I kind of get mad at it.
I keep a sign on the monitor that says, "This is not a service I provide," because I'll get talking and I think, oh, well, that sounds interesting, and I have to look at that and go,
it's a distraction. Yep. That's what it comes down to, is we have to be very aware and focused on when something comes up that's a distraction, because I'll do the same thing, Sarah. Somebody will come in and say and say something, and it might not even be that they're even directly asking for it, but it'll trigger a thought, and I'll think, I can offer that as a service. And this year, more than ever before, I've learned to catch myself in that thought process and say, no, that's a distraction. And I need to just stay focused on doing one or two things and doing them really effing well. And that's what it comes down to for me. And when I do what I do really well, there are a lot of other things I can do well, but there are only a couple things that I do so well that I can honestly say I feel that I do these things better than just about anybody else out there. Those are the things that I can define like that I want to focus on doing. And I think that is an excellent note for us to end on. We've gone over by about 10 minutes. But thank you, Chris. Amazing. Deborah, amazing. Everybody else, thank you so much for being here. I really appreciate all of you, each and every one of you showing up here every week. And I look forward to next week. Next week, we have a really, really cool show coming up. We are going to be looking at something called, we talked a bit about Bill.com. This one's called Checkbook. And it is, I believe, potentially a very compelling alternative to Bill.com. I'll leave it at that and let you guys explore this week. And we'll see you all next Friday at 8 a.m. Pacific, 11 a.m. Eastern. Have an absolutely fantastic day. And don't forget to check out Gina's Hangout later today at 2:30 Pacific, 5:30 Eastern. She's always got some great stuff going on.
Thank you.